In June 2012, the New York Department of Taxation and Finance issued a 124-page manual to its auditors at field offices throughout the state, instructing them on how to track down snowbirds and assess additional New York taxes. After reviewing the manual, one might ask, isn't a person entitled to some privacy? Is New York going too far to collect revenues, and isn't there likely to be a backlash where former New Yorkers will simply spend their summers elsewhere? Let's take a look and see what the manual says. Many people will think that when they move to Florida and stop filing a New York resident return, that unless they are very unlucky that New York State will forget about them and never challenge the effectiveness of their change of domicile. What they do not realize is that the New York State Tax Department's computer program sends out an alert when the retiree stops filing a resident New York income tax return, which is likely to trigger the state to send a letter asking detailed questions as to why the return was not filed. Where it appears that New York State may be deprived of substantial amounts of taxes, an auditor will likely be assigned to the case. The initial letter may not be too alarming, and the retiree may simply write some answers and return the questionnaire to the auditor. The auditor may call the retiree and ask further questions or even stop by his home. Answering the initial questionnaire is very likely to be the beginning, not the end, of the audit process. Before responding to the initial questionnaire or responding to any other inquiry, the retiree should contact a professional advisor with specific knowledge and experience in this area of law. It is important at this stage that all facts supporting a domicile change be marshaled in logical fashion and presented in a most effective manner. A prior manual given to the auditors suggested that the auditor learn to develop listening skills and nudge, yes, they actually used the word nudge, the conversation in the direction necessary to provide information needed to make a tax assessment. For example, one auditor called a retiree in Florida and requested a personal interview. The retiree responded, "I won't be able to see you until I return home in the spring." Wrong response. If the retiree had changed his permanent home to Florida, then he should have responded, "I won't be able to see you until I visit New York this summer." At some point, the auditor is likely to request all canceled checks, bank statements, telephone bills, credit card statements, and country club statements for the years under audit. The auditor may examine these records for several days at the office of the attorney or accountant with the assistance of a laptop computer with specific software that analyzes various entries and produces a 12-month calendar coded to show likely days in and out of New York State. For example, bank records showing ATM machine withdrawals may disclose your location on a particular day. The auditor may also examine your E-ZPass to ascertain where and when you were traveling. Remember that if you are in New York State for more than 183 days, even though you have effectively changed your domicile to Florida, you must file as a resident New York State taxpayer if you maintain a place of abode in New York. This is so even though you are a Floridian. Be careful. The manual, in an attempt to have a more uniform approach among its various auditors than in the past, has designated 5 primary factors that all auditors are to consider to determine if you really are domiciled in Florida. These factors require the auditor to delve into your personal life in a very intrusive manner. As you learned in the first session, the domicile test utilized by the courts is subjective and seeks to read your mind. The 5-factor test, in contrast, is objective and is often misleading, as you soon will see. The first of the 5 primary factors is referred to in the manual as, quote, home, unquote. The auditor is instructed to consider home either his or her actual dwelling or the community where the individual has established strong and endearing ties. The manual points out that where a couple resides in a community where they raise their children and sell their residence to purchase or rent a smaller residence in the same community, that new residence takes on the full range of sentiments the couple has for the community in which they reside. The manual, among other things, instructs the auditor to compare the size and value of both residences. He is also to compare employees associated with each residence, such as domestic help and groundskeepers. The manual concedes that an individual may prefer to use a former principal residence as a seasonal home or hotel substitute rather than selling it, and that affluent non-residents may have no economic need to sell their New York home. When you finish this session, we suggest that you click on Full Text, where we reproduce much of the exact text of the manual and make additional observations. Another factor is active business involvement. This seminar is specifically directed at the retiree. However, often some prior executives of a New York closely held corporation still remain in frequent telephone and computer contact with their children who are now operating the business and stop in when they visit New York during the summer months. Under such circumstances, the manual suggests that the auditor review the degree and dimension of the individual's involvement in the day-to-day operations or in a policy-making position. In the full text of Session 1, we review the Burke case. Mr. Burke, after declaring Florida his domicile, continued to take some interest in the New York business he had built and which supplied a stream of retirement income to him. The court held that despite such involvement, the hands-off, relaxed, and recreational, social-oriented lifestyle was consistent with his change of domicile. If you continue to have some active New York business involvement, you will want to review the full text of this session as well as the cases we reviewed in the full text of the first session. Another primary factor is referred to in the manual as, quote, items near and dear, unquote. In one case, the court noted that the couple left many important items in their New York residence, like crystal and furniture, but stressed that they moved artwork and sculptures created by a relative and jewelry that was kept in a Florida safe deposit box. The administrative law judge focused on the items brought to Florida and concluded that these valuables and sentimental items represent a clear emotional tie to New York, which was severed when the couple moved them to Florida. The audit guide, quoting from that case, notes that, quote, the location of pets, rare books, art, and antique collections, and family photo albums should be investigated, unquote. In one domicile case Allen tried, the judge asked his 80-year-old client where she kept her good china. She responded that she has two sets. One she brought to Florida, the other she kept at home. It would have been better not to refer to the New York residence as her home, but Allen still won the case. If you collect stamps, coins, match covers, baseball caps, or anything else, move them to your residence in Florida. Also, if you have videotape recordings of weddings, graduations, or other events, move them as well. If they are insured, make sure you indicate their physical location in the policy. If they are valuables, send them to Florida by a first-rate bonded professional carrier so that you have proof of their removal from New York. A fourth factor is referred to as time. We already discussed the 183-day test and pointed out that, in addition to the domicile test, an individual cannot be present in New York State for more than 183 days in a calendar year and still be treated as a non-resident of New York for income tax purposes. But the manual also includes the time factor as a primary factor to determine whether the domicile test itself is satisfied in the first instance. The auditor is likely to place this factor in the negative T column if the individual is in New York for slightly less than 184 days, and place it in the positive column if the individual is in New York only for the summer months. The last primary factor is referred to as, quote, family connections, unquote. The manual suggests that this factor be limited to the retiree's immediate family and points out that for most purposes, this will consist of the individual, the spouse, and any minor children. Most retirees will not have minor children. But the manual also points out that in some instances, family connections can refer to a parent, adult children, and grandchildren. Using the five-factor test may often be misleading and work against the snowbird and actually contradict his actual intention to make Florida his primary and permanent home, which is the court-sanctioned subjective intent of domicile. The manual also lists other factors, but points out that these are subordinate to the five primary factors and that in virtually all cases it is usually not necessary to review them as part of the domicile audit. The auditor is admonished not to take these into account unless a conclusion cannot be reached solely upon the primary factors. These secondary factors include the address on monthly bank statements and similar correspondence, the physical location of safe deposit boxes, the location of autos and boats, where the taxpayer is registered to vote, and the extent to which he votes, telephone listings, and whether a Florida will and other Florida documents have been executed. You will recognize that these are items included in our checklist in Session 2. Despite what it says in the audit manual, you should follow as many of those checklist items as possible. If your case is litigated, a court may give them substantial weight even though the manual indicates that they are secondary factors. The auditor may also stress at some point that you failed to satisfy some of the checklist items if you decide not to follow the items on the checklist. There are certain non-factors that the audit manual states that the auditor is not to question. These non-factors include place of internment, the location where the taxpayer's will is probated, passive interest in partnerships or small corporations, the mere location of bank accounts, contributions made to political candidates or causes, the location where the taxpayer's individual income tax returns are prepared and filed, and where charitable contributions are made, or the location of religious organization memberships. Despite the inclusion of some items as non-factors and the differing weight the manual affords to primary factors and secondary factors, the court, tax tribunal, and administrative law judges, and even some auditors are likely to apply their own standards to the facts of the particular matter before them. So take as many protective measures as possible.